This trader makes over $99,000 per year trading crypto, and I'm gonna show you the simple way he does it.
From these strategies, I got to the point where I'm earning between $16,000 and $30,000 per month. And I'm a very conservative trader. So it's very achievable for you guys to be able to earn $99,000 per year just by following these simple steps.
In this video, you're gonna learn first, the big picture approach to trading that easily and safely grows your money. Second, the two most effective strategies that you can learn today. Third, the free tools that Kyle uses to trade every single day. And fourth, the exact strategy Kyle recommends to make $99,000 or more per year trading crypto, including the coins that he'd use to do it. There's an equation to make this happen, but good news is it's extremely simple. Here it is. The key to $99,000 per year. We're gonna reveal each part of this equation piece by piece through this video. But before you can zoom in, you have to zoom out.
It is very realistic to make $99,000 per year as a trader if you follow these three principles. 1, follow testable rules that give you data that you can learn from. 2, use smart risk management that keeps you safe. And 3, compound your returns over time to reach your financial goal.
Now you need to understand this part or nothing that follows is gonna make sense. If you don't know what compounding is where you trade small portions of your overall pot to gain small profits, and then you reinvest those profits to grow your overall pot. Compounding is also the first piece of our equation.
I really want you to understand that these three principles will literally allow you to predict how quickly it will take for you to get to your financial goals. For example, if you were to start with a $1,000 account, risking to lose 1% to gain 2%, and you accomplished a 60% win rate with the rules that you've given yourself, you can grow your account from $1,000 to $50,000 in just 330 trades. And it only grows from there. And that's where the patience piece comes in, because with a $1,000 account, you're gonna be risking to lose $10 to gain $20. But once you get to 50,000, you are gonna be at the point where you're risking to lose $500 to gain $1,000. So your stop loss budget and your income scales as you compound your account. Let's first look at principle number 1, following testable rules. There are some trading indicators that you can compile together to make rules and earn a reliable trading income. But I'm gonna go over a Bollinger Band strategy that has 3 indicators that you can build rules around that are very simple to follow. Indicator number 1 is the Bollinger Band indicator. Indicator number 2 is the money flow index. And lastly, indicator number 3 is the 500 EMA. I'll show you the rules for these indicators in action in a second, but I really first want you to understand how important it is to follow these rules. You can use a website called TradingView and go on replay mode. And what replay mode allows you to do is backtest these rules, and you will be able to see how many trades on average with the rules that you've given yourself in a week or in a month or in a year, exactly how many trades you're going to do. And that's going to allow you to predict what kind of income you can expect with the rules that you follow. And I share all of my rules on Finova, so whether they're mine or someone else's or the ones you're trying to make for yourself, if you're trying to earn $99,000 per year, then you have to be analyzing the rules on TradingView. It's the only way you're gonna be able to know if you're gonna be right or wrong in a percentage-based figure in a live trading environment. So just allow your account to compound, be extremely patient. Don't forget that I've started with $26 and now I'm trading with a short-term account. It's like a scalping-based strategy account of $100,000, and I have a long-form trading account of 2.7 million. So it just takes basically patience and basic math, and you can also accelerate your growth by using leverage.
Now, leverage. If you don't know what it is, this is where you borrow money or capital to increase your potential return. So with 2x leverage, a successful trade will double your return. So if you were actually going to make a 10% return, you're now making a 20% return with the same amount of money. However, leverage works in both ways. If you get it wrong, your losses are also doubled. This is why Kyle and I recommend that you only ever use small amounts of leverage, and you only even consider leverage after you have established your emotional resilience to trade with no leverage. You must master no leverage first before you get into leverage, and that reveals the next piece of the equation. So now we can see compounding small leverage profits plus blank equals our goal of $99,000 per year. Now I'm going to reveal the next part of the equation in a second, but first, full disclosure, we follow this exact strategy over on my crypto research and signals platform, Finova, and we are getting wonderful results just like this. At Finova, we have been working closely with Kyle's business for a few years now, and it was immediately evident that Kyle is a genius crypto researcher and trader. And because of that, we actually just recently acquired his entire research business, enabling him to come on board to Finova full-time as our head of research. There he shares his trades in real time, so any member can copy his results and understand why he made those actions. Here's our members getting in on it. Every day we're seeing these kinds of results. And right now, with the market activity and energy flowing into crypto, there's never been a better time to get involved. But just a warning, if you are interested, make sure you join ASAP as we sell out of spots every week. So hit the link below and join before they sell out if you're interested. Now, 2 strategies for $99,000 a year trading crypto. There's 2 main methods for building up your account and getting you consistently winning.
Trend-based strategies allow you to capture the largest moves in the market. What trend basically means is the perceived direction of the market. So, for example, if we're in an uptrend, the price is going up. If we're in a downtrend, the price is going down. So to use a strategy like this, what you're doing is you're preparing yourself with a set of rules telling you that we're about to go into an uptrend or a downtrend, so you can make money along the way up or along the way down. And you'll have yourself a set of exit condition rules telling you when it's time to get out. But there is downsides to strategies like this. The downside is markets are super volatile, so you got to make sure you know how to place your stop losses correctly. And they don't trend very often. Actually, they only trend about 20% of the time, and 80% of the time we're ranging. If you want to give yourself a more reliable sense of income, people tend to turn to range trading strategies. As a beginner looking to earn $99,000 or more per year, I would recommend you to stick with a range-based trading strategy for multiple reasons. Like, one reason is the fact that the market ranges 80% of the time. So you're going to give yourself much more opportunity to learn and develop as a trader. And if you stick with the higher market cap assets like Bitcoin or Ethereum, you'll find that your win rate is much higher as well with those kind of assets to practice with, because it takes much more money to influence the price of those assets. So the indicator rules that I was talking about before, the indicators you're going to need to follow the rules are the Bollinger Bands, the 500 EMA, and the money flow index. So here's what it looks like.
Now this is the most crucial part, bringing everything together. Here's the exact strategy you can use to make $99,000 or more per year. The equation is simple: compounding small leverage profits plus range trading. That equals $99,000 per year or $8,000 per month profit. Here's Kyle showing you exactly how to range trade, click by click.
Okay, so right now we're looking at Bitcoin on the 1 hour time frame. So when I did my back testing with these set of rules to see how well they would perform, I got myself a relatively high win rate. So I do recommend trying not to veer away from this time frame. The 1 hour time frame is the most profitable one that I was able to back test. When I followed these set of rules on multiple time frames, like the 5-minute, the 15-minute, the 4 hour time frame, the daily, the 1 hour gave the most profitability, and it gave me the most opportunities as well. So I stick with the 1 hour. Consider that a form of rule as well. When you are building rules around your strategies, timeframes are incredibly important. Next rule is the Bollinger Bands. You're seeing that right now on my screen as this weird green looking blob on my screen right now. Now, when it comes to setting up the Bollinger Band indicator, you want to go over here under the indicators tab on tradingview.com. Okay, and then you're going to search up the word Bollinger Band, and there's a bunch of different ones, but all we're really aiming to do is just grab the basic Bollinger Band indicator. And when you have it added to your chart, you want to click on this little arrow tab on the top left-hand side over here. Okay, and that arrow allows you to adjust the settings of the indicator. So we're going to go over where it says BB, and we're going to click on the little gear icon. and it's going to pull up this little field. Now, when I did my testings with the Bollinger Band strategy, I found that the 50 length gave the most accurate readings and preparing for a reversal. So you have to adjust the length to 50, and then everything else can stick to default. Okay. And how I change the colors, you just go over here to style, and you can adjust all that if you prefer to. If not, it doesn't matter. It's just colors. We got the Bollinger Band indicator up there. And now we're going to add the EMA. The EMA is this white line you're seeing right here on our screen. I use this as a way with the rules of this strategy to control our bias, meaning if price is below the EMA, we're only going to be focusing on shorts. We're going to ignore any of the other rules that tell us that we might be preparing for a long. Even if things seem okay, just ignore the fact that it might be positioned for a long while we're below this 500 EMA. And the opposite's true for when price is above it. You prepare for longs rather than shorts when price is above the 500 EMA. How you find the 500 EMA is very simple. You just type EMA and you will find exponential moving average, or moving average exponential, sorry. And I recommend favoriting all these indicators as well, so it's a lot easier for you to find, because when you type it in these fields, it always appears at the top here. So you click on that, and you'll notice when you click on it, this little blue line appears on your screen instead of this white one. So how I modified it to look like this and behave like this is I basically just double click on it, or the same way we did before with the arrow down below. You just go to the gear icon and you can make your adjustments there. Okay, and then you can adjust the color of the EMA as well. You can be white just like mine, or you can leave it blue, which is default. It doesn't matter, it's just a color. So it's all based on your own personal preference. You're gonna find that when you're building your own strategy, it's almost like making your own art form. So go over to inputs after you're done with the EMA, and you're gonna change the length from 9 to 500, and then it will match what you're seeing right here, okay? And then lastly, we just need to add the MFI, which stands for the Money Flow Index, which is also similar to the EMA, where it compiles data based on moving averages to give you an idea of when the market's going to be exhausted or overbought. So we're going to go up to indicators, and we're going to type MFI, and you'll see Money Flow Index. That's the one you want to favorite, and that's the one you want to add to your chart. And you can leave it as default. So it's simple, and you don't have to make any changes to how this indicator works. So now let's go over, now that we have all the indicators on our screen, let's go over how the rules work for this strategy. We're first going to be going over when it's appropriate to enter a short or to sell an asset, and where our target is going to be, okay? So first thing we're going to go over is the Bollinger Bands right here. When price gets outside of the Bollinger Bands, that's when you're preparing to enter a trade, okay? Right here. Now, since we're focusing on shorts, we're going to look at when price escapes the Bollinger Bands to the upside. So when it escapes, this does not mean enter a short, but what it does mean, we're going to prepare for a short when we have our first hourly candle close back inside of the Bollinger Bands. And this is a move that just happened very recently, okay? This was about, let's see, Wednesday, the 10th of July. And we had price come up, and we got that price acceptance back inside when the candle closed back inside the Bollinger Bands. So this is one of our rules to enter a short. And then the other rule for knowing when we're going to be entering shorts is the EMA, like we talked about before, okay? So we had the EMA is telling us our bias. We should only focus on shorts when the price is below it, okay? So the price is currently below the EMA, so that's one rule that is telling us that we can enter a short. And then the last rule is just right here. We can see that we are overbought on the MFI. So overbought territory is between 70, the 70 level. When you hover your mouse over top of the MFI, you'll notice that there's numbers that will appear on the right-hand side. And the right-hand side will show you that right now we're above the 70 level, and we dipped above the 80 as well. So here we got this rule met, we've got this rule met, and we got this rule met. So that means we can enter a short. Now, the target for this strategy is actually very simple to follow as well. This orange line right here. This is the center moving average of the Bollinger Band. This tends to act as a form of support and resistance. So to avoid, especially beginners, staying in their trade too long and have it bounce and come up and then end up getting you stopped out, we just prepare to exit wherever the Bollinger Band center moving average is, this orange line. Okay, and we put our entry here on our short. We put our stop loss above the most recent high. And then we target the center moving average. And a good rule of thumb as well is if you find, even if the entry conditions are met, if it says, okay, we are preparing for a short, all the rules are met, this doesn't mean you should enter the trade. The reason why I say that is because if you find when you use your short or long position tool on the TradingView website and it doesn't say the number 2 or higher, that means you could have inconsistencies with your profitability. You want that to be a number 2 or higher, so you're aiming to gain 2 times more than what you're trying to lose. And that will allow you to be consistently profitable even if you only have like a 35% win rate, okay? You'll be at break even at 35%. Anything above 35% is profitable. So let's play this out because I'm in replay mode right now and see if this hits the target, okay? We're gonna play this out a little bit. And in this example, it hit the target, okay? And you might be able to learn new stuff in the future that tell you that you can stay in your trade longer, but this is a very beginner-friendly approach with a high win rate strategy to allow you to get in and out of a trade relatively quickly and capture quick gains. So we had price action dip out here, but we can see that with our longs, what we're looking for is the MFI level to be at, basically, there's this 20 levels at the bottom, and then the 30 level is also like an oversold territory. If we're at the oversold territory, then we can prepare for a long. If we are seeing price action above the EMA, our bias is long, so we could focus on long positions. And once, all we got to do after that is just make sure that we have a candle close back above it right here. And we have the candle close back inside the Bollinger Band, so then we can target here. And we'll be in and out of our position relatively quick, having our stop loss here, our target here. Okay, so with this strategy, it has a very high % win rate. Most people have a 70 to 90% win rate with this strategy. My 9-year-old son, Jaden, he actually has an 80% win rate with this strategy just by sticking with the stop loss right below the price action, okay? So just prepare yourself mentally that you cannot win them all, but sticking with the rules, you know what your statistical edge is and what the probability is of being right is, okay?
Now listen, I cannot stress enough how important it is to only risk small amounts and compound over time. Focus on growing that 1% of your portfolio. Don't focus on just smashing big wins straight away. This is for your own financial safety. This is for your ability to trade intelligently over time. This is for your ability to trade tomorrow. Don't lose all your money today. When you take on too much risk in the beginning, you actually train your emotions for failure. But the good news is this is completely avoidable if you know how to spot it. To avoid that crucial mistake, check out this video on screen.